Good afternoon, everyone. Today we're going to present our final assignment for Business and Analysis Valuation. First of all, we would like to introduce our group members. The first one is Annisa, and then Lulu, and the last one will be myself, Naura Raihan. Our lecturer is Mrs. Alfia. We would also like to give our acknowledgement that this presentation is only for academic purposes, so it may not be reliable if you use this presentation as your references. And the next one will be our presentation outline. The first one will be the company overview, and then will be continued by the forecasted equity valuation and also the other aspect. So, PT Semen Indonesia is established in 1957, which is owned by government for 51% and the rest goes to the public. Here are the companies that are the subsidiaries of PT Semen Indonesia. PT Semen Indonesia has some products and also services such as cement products, construction, heavy equipment, and then integrated logistics and also manpower supplies. The next presentation will be presented by Annisa.
Okay, thank you Naura. My name is Annisa Rizqi and I will explain about the forecast of Semen Indonesia. We have conducted forecast of SMGR for the next 5 years from the 2019 until 2020 based on historical data from 2016 until 2018. And we also have made several forecasting assumptions such as sales growth rate, NOPAT margin until debt to capital ratio that will be explained later. And the first one is sales growth rate. The decomposition of changes in Semen Indonesia distributor productivity resulted in percentage change in sales per distributor consists of the effect of changes in domestic demand and the effect of changes in export demand. And this is the expected sales growth rate for Semen Indonesia. The first one is changes in domestic demand. In 2019, the company is predicted will have an increase in sales, but the increase is not bigger than the previous year because there is a competitor from outside Indonesia, which is Consement from China. And the next 4 years will also increase because there is a high prospect for Semen Indonesia because there is a movement of capital city of Indonesia from Jakarta to Kalimantan. But for the implied sales growth rate, the increase from the 2019 until 2021. But in 2022 until 2023, the implied sales growth rate will decrease because the demand will not bigger than the previous year. And the next one is NOPAT margin. This is the composition of changes in Semen Indonesia's NOPAT margin, and annual percentage change in NOPAT margin is consists of the effect of input price that reduce the NOPAT margin by 7.9%, and the net effect of GA cost saving will increase the NOPAT margin by 12.1%. And this is the calculation for expected NOPAT margin for Semen Indonesia for the next 5 years based on the effect of input price and the net effect of SGA cost saving. In calculating this NOPAT margin, we predicted that the company will maintain its cost leadership strategy, so the NOPAT margin of the Semen Indonesia will increase for the next 5 years. And this is working capital to sales. In calculating working capital to sales, we consider several components of working capital such as receivable to sales, inventories to sales, payable to sales until net other current asset liabilities to sales. In working capital to sales for the next 5 years, the company will have an increase in working capital to sales because the company is predicted will maintain its capability to pay the debt, to pay the loan, and also will maintain its capability to collect the receivables, and company also is predicted will improve their performance in selling their product. Okay, next for the net non-current operating asset to sales, our group have made assumption that the net non-current operating asset per distributor will decrease in 2019, and for the next 4 years and from the 2020, the value of net non-current operating asset per distributor will be the same, and the sales per distributor is increasing for the next 5 years. Therefore, the net non-current operating asset to sales will decrease for the next 5 years. And this is the forecasting assumption for the other assumptions, such as investment asset per sales. Because we predicted that the company will have an increase in sales, so the company will have an excess cash from its sales to invest in another asset. So the investment asset per sales will increase for the next 5 years. because the investment asset will increase for the next 5 years, it will also affect the after-tax return on investment asset. And for the debt to capital ratio, the value of debt and the value of capital and the value of group equity is predicted will be increased for the next 5 years, but the debt to capital ratio will goes the same. And based on the forecasting assumption before, this is the forecasted financial statement that consists of income statement, balance sheet, and cash flow statement. And this is the income statement. The company is predicted will have an increase in net profit for the next 5 years because the sales and the net operating profit after tax will also increase for the next 5 years. And it also goes the same for the net interest expense after tax. And for the forecasted balance sheet, the company is predicted will have an increase in its business asset and its capital. It because of the net working capital to sales in the previous assumption will increase for the next 5 years, and the net non-current operating asset will goes the same, and investment asset will increase for the next 5 years. Meanwhile, the debt and group equity will increase for the next 5 years. And this is the forecasted cash flow statement that consists of free cash flow to equity and free cash flow from operation. Based on this calculation, we concluded that the company will have free cash flow from operation in a positive value. It means because the company will have a good performance in the next 5 years, the company will have a cash flow from operation in a positive value. And for the free cash flow to equity, the value is also positive and increase for the next 5 years. It means that the company will have a sufficient cash for the shareholders regardless to the cash of operation and the cash for the debt payments. And so this is the forecasted financial statement, and the next presentation about the equity valuation will present by my friend Lulu.
Thank you, Annisa. My name is Lulu Thasya. I'm going to explain about equity valuation of Semen Indonesia. This section will be divided into 3 main topics, the CAPM, DDM, and DCF. The equity valuation itself is divided into 2 models, which is I have mentioned before, the DDM and DCF, and each model need required rate of return, which can be acquired by calculating the cost of equity using the CAPM formula. The CAPM, Capital Asset Pricing Model, consists of risk-free rate, risk market rate, market risk premium, beta equity, and the CAPM itself. Beta equity is amounted 1.0679, and it tells us about the sensitivity of stock price change due to economic changes in that industry. At this rate, changes in share price will be very sensitive due to some events related in its sectors, especially in cement industry, as we all know that cement industry is now facing an excess in supply. Many cement products that produced locally are not sold. It is because of the price set by the local companies is more expensive compared to the foreign companies. Local companies tend to be less competitive in the local market because of its higher price. Nevertheless, the company also market their product outside Indonesia, such as in Vietnam. Finally, the CAPM. The CAPM of 14.36%, it implies that the Semen Indonesia is really attractive for investment. The return for investing in Semen Indonesia is really high, and it supports the statement that the shareholders may obtain more benefits by investing their capital on Semen Indonesia. And as we all know that high return is followed by higher risk, and this higher risk is, as I have mentioned before, about the beta. Second, the DDM, dividend discounted model, consists of EPS, average growth rate, percentage of dividend, dividend estimation, and the PV of dividend estimation. The DDM itself shows us the value of Semen Indonesia as a company is below than the share price based on the data from IDX. It means that the share price is overvalued. With the situation, the possible recommendation for the shareholders of Semen Indonesia is to sell their shares. However, we also recommend the shareholders of Semen Indonesia to maintain their shares. Why? Because Semen Indonesia still has a good prospect for its future. The movement of capital city from Jakarta to Kalimantan also support its business, as the government will use their product to build an infrastructure in the new capital city, because the government itself is major shareholders of Semen Indonesia. Besides that, Semen Indonesia has just acquired Holcim Indonesia, and so it increased its market share. It will also be a good prospect for Semen Indonesia to increase their sales performance. Hopefully, by maintaining the shares, shareholders will obtain more benefits from their investment in Semen Indonesia. Finally, the discounted cash flow. Discounted cash flow calculation consists of the free cash flow to equity, terminal value, PV of terminal value, and the enterprise value. This calculation shows that the value of Semen Indonesia as a company based on its future cash flow. As we can all see that the enterprise value is higher than its PV of terminal value, and this means that Semen Indonesia may be a potential investment for its future. The next presentation will be presented by my friend Naura.
So back with me again, Naura Raihan, and I will present about the other aspects that consist of financial distress, debt valuation, other qualitative information, and also merger and acquisition. The first one is about financial distress, which according to Altman Z-score model, if the score is above 2.67, then it means that the company didn't face any financial distress. As for PT Semen Indonesia and also PT Semen Batu Raja, the scores are above 2.67, which indicates that they didn't face any financial distress in 2017 and also 2018. It's also because PT Semen Indonesia is the market leader in the cement industry in Indonesia, which they own almost 40% of the market. Their market shares also increases as they just acquired PT Holcim Indonesia. The next one is about debt valuation. Since we know that PT Semen Indonesia is a state-owned enterprise, so if they face any default, the government will inject more investments to the company. So that's why the probability default is really low, meanwhile, the recovery rate is higher. And the coupon and face value is based on the obligations that is issued by PT Semen Indonesia. And here are the debt values of PT Semen Indonesia. In doing our valuation, we also consider in qualitative informations, both from external and also internal. For the internal, PT Semen Indonesia has changed their board members, and also they changed their marketing strategy to focus more on their customer, and also they want to expand their market to the regional, such as ASEAN. And also they try to do the diversification in their products. Meanwhile, for the external events, the US-China trade war, sustainability issues, and also the entrance of other foreign companies also affect our valuation. And the last one, for the merger acquisition, we know that on November 12, 2018, PT Semen Indonesia acquired 80.6% of the shares for PT Holcim Indonesia, which increases their production capacity and become the largest production capacity in the ASEAN market. So, for the conclusion is, we know that PT Semen Indonesia has a good prospect. So that's why, in doing our valuation for the forecasted financial statement, they have a good and positive value. We also recommend, besides to sell the share of PT Semen Indonesia, we also recommend the shareholders to maintain because of the good prospect of PT Semen Indonesia. That's all for the presentation. Thank you.